More and more day traders are blowing their prop firm accounts in these new market conditions. Things have gotten extremely volatile. We have a new president administration. We have tariffs. We have executive orders. We have so much uncertainty in the markets right now. And the volatile swings are actually really, really big, causing day traders to be over leveraged, which in turn is causing them to blow their accounts extremely quick. We're going to talk about how you can stop blowing your prop firm accounts in this video. Before we do, fam, we're live right here at the New York Open, day trading the NASDAQ. You see my green days, my red days, my full tilt moments, everything that involves me as a trader, you see live right here on YouTube. So be sure to smash that subscribe button. Also hit the like button. It's a free way to support the channel. It tells YouTube, hey, I like this guy, I like the content he's putting out, and I want to see more of it. Also, if you want to skip the eval stage, go straight to a funded account. TradeFi is running 30% off. You see in the corner of your screen there, 30% off their straight to funded accounts. You can buy an account now and start earning money tomorrow. Also, if you use Take Profit there, 30% off with zero activation fee right now. Use code JM for both prop firms to lock in those deals. Lastly, if you go to tradewithjoey.com, there's a link down in the description for that. There's a free day trading course on there. You can guys go in there, check it out, see some strategies that I've used in my trading career that have helped me make a little bit of money from these markets. Damn, with that said, let's get in the video. So with all of this uncertainty, all of this volatility in the markets, it's our job as traders to adapt and tweak our approach to the markets in order to protect ourselves and preserve capital. The position sizing that worked before is not going to work in today's markets. When the Biden administration was in the office, we didn't really have all of this market volatility, right? Then Trump came along and things got crazy. We have massive swings in candles, massive 5-minute candles, even massive 1-minute candles. But we have all these tariffs. We have all this economic events that are taking place, causing a lot of uncertainty in the markets. And what does the market hate? Uncertainty. This market volatility doesn't really remind me of the COVID era because we had a lot more volatility than this during the COVID when the VIX was up at like in the high 60s. But it does remind me of when Trump originally took office to begin with, and we had all of that volatility into the markets. And now we have to play defense, and we're going to cover that right now. Let's jump into a chart and just kind of walk through exactly what's been happening in the markets, all of these price swings, what we're seeing, right? If you look at the NASDAQ here, we're on the NASDAQ, right? And we're on a 5-minute time frame. Let's just dissect like what's really been happening in these markets, and then from there develop really a plan that helps us gain an edge and keep our edge, but also play defense at the same time, right? If we grab the price tool, look at the size of these candles. This was today, by the way, right? On Tuesday, March 11th. This was today. Look at the size of these candles, right? This candle here, this is a 5-minute candle, okay? We take our price all the way down here. That is a 121.5-minute candle, right? Even going down lower where the candle is actually a lot smaller, it appears to be a small movement, but that's still a 56.5-minute candle. Going up to here, right? Looking at this green candle here, this is, what is that, 93-point candle. And then going over here, look at these back-to-back red candles on the 5-minute, right? Let's see how big these are. Looking at these candles, right? This first one here is 112 points. This next one is 90, what was that, 93? 97 points. So over a 100-point candle and then another 97-point candle back to back on the 5-minute time frame. That's over, what is that? Let's see. That is 164 points in 10 minutes, right? 164 points in 10 minutes. That's showing exactly how volatile things have been lately and how large price swings have been. Like, let's just go over here. Let's look at this, right? Look at this 5-minute candle right here. Look at these back-to-back 5-minute candles. Let's just see how big these are. Okay, this was right at 9 o'clock. Okay, this is probably a news candle. Look at this news candle. Let's see. That news candle is 258 points. Looking at the next candle over, what is that? 164 points. Almost 500-point move back to back in 2 candles. In 2 5-minute candles, almost 500 points back to back, right? That's showing exactly how volatile things are. So what the position sizing that we used to trade with just isn't going to cut it anymore, especially with prop firm accounts. If you are trading 50K accounts, think about this. If you're trading 50K accounts, say what Top Step, right? Daily, your max drawdown is $2,000. Okay, cool. And you're trading 1 mini, right? I know a lot of people would trade those minis on those 50Ks, which I don't think they should be doing, but hey, it is what it is, right? Looking at these candles here. Just let's take this one for example. If you're trading 1 mini and you're in the wrong direction of this, 121 points, your account's blown. 1 5-minute candle, your account's blown, right? Overly blown. Like, I mean, it's gone past your blown account, right? It has blown your account in 1 5-minute candle. And that move doesn't have to happen it can happen within 2 minutes, right? This is just a 5-minute candle. Like, it could have gone that many points in 2 minutes, right? So the risk that you're taking trading minis is astronomical, right? Compared to what it used to be. Look at this candle here, right? Let's just say you were trading 1 mini, right? You're trading 1 mini and you got caught on this 5-minute candle, 154 points, 154-point 5-minute candle. Say you're even trading on, what is that? 150K, where your drawdown is 4,500, right? So what's 154 times 20? 154 times 20, that's $3,080. So you would have taken a $3,000 loss on 1 5-minute candle trading 1 mini, and your max drawdown on a $150,000 account with TOS, that's 4,500. You would have blown past more than half, way more than half of your maximum loss on this 1 5-minute candle. So what can we do, right? What can we do? Now, my personal favorite thing right now is micros. I love micros. Even before we were getting all of this volatility, micros have been huge in my trading success and helping me stay in the markets longer and have longevity in my profit accounts. I'm not blowing accounts. If I do blow an account, it takes me a long time to blow an account. They have helped me stay in the markets and keep my profit accounts a lot longer than what trading minis have been. One MNQ contract on the NASDAQ is $2 per point. Therefore, you could trade literally 1 micro and be able to swing all of this volatility and still come out with a lot of money, right? Let's just say 1 micro, right? Let's just do an example. Let's just say you were getting in here, right? We swept these lows over here. We swept the initial balance. We bought right back up into the initial balance, back up into these lows, indicating bullish momentum. And you want to get in on this price action, right? You find a pullback. All right. So let's say you don't have a perfect entry. Okay. So let's just say you get in, let's see, about right. Let's say you get in about right here. Okay. And you're riding this thing. You want to ride this thing up. Now, let's just say your entry here is 345. Your stop loss is going to be just below this wick here, right? As a point of invalidation. Okay. So as a point of invalidation, that's going to be your stop loss, which is actually a 69-point stop loss, by the way. Doesn't seem that big, but it is 69-point stop loss right there. Do the math. 69 times 2. On 1 MNQ, you would have lost $138 on just this move alone, right? 1 MNQ is $138 on this one move that's happening like that, right? 69 points, 1 MNQ, $138. That'd have been a $138 loss if you had lost that, or if you got in, right, and you were right on the trade. So we're at 134 as an entry, and just say you were right on the trade, right? And you're riding this up, say you take it out at these highs up here as a target, that's 153 points. That would have been a $300 profit right there. And look how fast that happened. Now, would this have been feasible in the previous market under the previous administration? Probably not, right? We weren't seeing this volatility, but now that we are seeing this volatility, we are getting massive moves to where you can make a ton of money on just 2 micros. Instead of trading 1 mini, which is equivalent to 10 micros, you can make massive amounts of money trading 2 to 3 micros per trade. So again, this kind of ties all back to the defense that we have to play and to protect ourselves in these markets, because again, this is not the same market that we were in, 6 months ago. This is a brand new market with brand new price action and brand new volatility. And with that, we have to adapt to position ourselves in order to trade these markets effectively. So the best recommendation I have for you is size down, right? I've been preaching micros over and over and over again. My community, which Discord link down in the description, by the way, my community uses micros. They have been making money. People posting on the Profits channel showing how much money they're making with micros. I have people getting payouts through like Tradeify and other prop firms with micros. I have people passing evaluations with micros. Don't be fooled into thinking that you have to trade minis in this market and try to make a shit ton of money all in one session. You can still do $1,000 days in this type of market with 3 micros. Three micros, couple trades, you could do $1,000 days. So why risk yourself in trading minis when you could have that smaller position size, still make a ton of money, but also be able to withstand these volatile moves when they run against you, maybe 30, 40, 50 points, right? Whereas if you were holding a mini, you're probably blowing an account if you're doing that. But with micros, you're not going to blow the account. You can withstand that type of price action. But anyways, that's not financial advice. This is my personal opinion, what I'm doing to approach the markets, how I'm adapting and positioning myself to trade these markets effectively. Family, if you like this kind of content, smash that like button down below, subscribe to the channel, get more daily content, and I will see you in the next video. Cheers.